So we're right here on the charts. And before I move any further, there's a few things that I would really, really love to get out of the way. The first thing is that we're not trading our typical set of instruments, right? We're not trading Euro USD or currencies in general. And we're also not trading metals in this video. We're not trading crypto as well. We're trading a special set of instruments called volatilities, right? So as you can see on your screen right now, it's volatility 25 1S index in this case. And these instruments are particularly different. These are computer generated price action, like algorithmically generated price movement. So the typical trade analysis and everything doesn't apply here. Um, there's a really, really good reason why I chose to use volatilities for this video, and you'll understand in a bit. But for now, I found a good trade on volatility 25 1S index, and I really want to get into this trade. So the first things to pay attention to would be the moving average lines, especially the larger one. In this case, it has a period of 120. This is important when we're trying to understand the market direction. So we need to get the general market direction. Here we see it moving in the bearish direction, which is downwards. And with this in mind, we know that this bullish move from here to this point right here is simply like a pullback on the bigger time frames, because the market cannot move in a straight line. It has to make some ups and downs. And then the question becomes, how can we make money from this? So we know the overall market direction is bearish and it's currently moving in the bullish direction. So eventually you should lose all of that bullish momentum and continue in its original direction, which is in the bearish direction. So we just really need to time our entry. You can see where I placed my sell limits order, and also the stop loss was placed above the moving average line, because there's a chance that the market moves to touch the moving average line before moving back down in the bearish direction. So I added an extra sell limit order just in case the market continues to move in the bullish direction. And then I divided my initial position size by 2, and all we can do right now would be to wait for the market to move to hit our sell limit orders, and hopefully the market doesn't reverse before it does so. So our first sell limit order has been triggered, and from the looks of it, I don't think the market plans to stop anytime soon. I think the market will hit the second sell limit order as well before moving back down in the bearish direction. But overall, I think this trade is still a good trade. So the market moved really close to the stop loss, as you can see. But fortunately, the stop loss was placed perfectly and the market reversed. And right now we're in some profit. So we've made a profit of around $400. And at this point right here, I think I'll be closing this trade. I see the market struggling to go below this level right here. So it's forming a support level. So for the next trade, I'll be risking everything that I was able to make with this trade. So a $400 stop loss for the next trade. And with a 1:4 or 1:3 risk to reward, we should be able to grow this account much quicker than we have so far. All right, so it's the next day, and I've just found this good looking trade on volatility 10 1S index. I really want to get into this trade as quickly as I can, but before I do that, I just want to go over the reasons why I'm getting into this trade. Okay, so the smaller moving average line just crossed over the larger moving average line, and this signifies a shift in the market direction. Well, at the moment, the market appears to be moving back down towards the bearish direction. So right here, we're faced with two possibilities, and the first of which is that the market continues to move downwards. And if the market moves down to break the moving average line, the larger moving average line, and closes below the moving average line, then I'll know for certain that the market plans to continue moving downwards in a bearish direction. And the other option would be for the market to reverse going up. And I think this is what's going to happen. And this brings me to one of the main reasons why I chose to trade volatilities. It's easier to spot pullbacks, to differentiate between pullbacks and major market moves with volatilities. So with big market moves, the market eases into the move There's no real rapid movement. The market gradually moves from the bullish direction to the bearish direction. Here, you can see that the market was initially moving in the bullish direction, and all of a sudden, it just came back down towards the bearish direction. So I expect the market to at least give a sign of reversal. So everything here just looks like a pullback to me, and I'll be trying to get into this trade for a buy for a long position. So I've just gotten into the trade, and almost immediately there was like an $80 loss. So I plan to risk $400 on this trade, and the moment there is a loss of around $400, I'll be out of the trade. But for now, I'll just need to wait for the market to do its thing. So it's been just over 20 minutes, and the market is very close to our take profit. You can see our point of entry was really, really good. It was a very good point of entry. So, ladies and gentlemen, we've gone from $240 to almost $5,000. It's just two simple, well-placed trades. Yeah, that's all I'll be doing for now. Thanks, guys, for watching. Like the video if you like it, and don't forget to subscribe. Thanks for watching, and I'll catch you guys in the next one.